We at Resurgent, we are an investment bank, and we've been doing fundraisings into multiple structures of SME and large corporates for last 11 years now. A year back, we guys actually ventured into the fintech space, and we started understanding that how can we deliberate much deeper into the banking platforms and financial institutions in India. And this is where we came up with the concept of scoreme.in. So that's a quick analysis software where we screen a customer in quick 15 minutes of time, and we tell the banker whether you can onboard this customer or not. So this is where I'm heading towards. So I'll quickly sum up my presentation since we are approaching towards the inaugural as well. Well, as we all know that the country is going digital, so yes, the industry trends are definitely changing, and we have seen a lot of movement in what is happening in the digital side. Everyone is, moving towards the smarter version of the life, and banks are also considering this as a, multiple level opportunity for them, where they can go much deeper into analytics, and they can know their customers better as they used to know 20-25 years back. Now, why exactly are we changing? So what has actually happened in the country is that nowadays the customer, they demand a self-service tool. So they don't want that particular hand-holding from a bank or a financial institution where they need to approach to a banker, have a 10-15 minutes discussion, and then decide that, okay, what to do. What today they want is that, as we were talking in the first session of the day as well, that mobile bankings, digital bankings, chatbot access is what is actually driving the customers today. Ultimately, if we have to go digital, we have to see that where are our customers lying. So yes, there is a certain mindset change in the minds of the customer where they are trying to go digital now. And yes, constant innovations are happening around the industry, and I think processes like robotic process automations in the banks, where they are trying to automate the entire flow chain, inside how they used to operate 25 years back and how they are operating today is changing. So these trends are certainly, creating opportunities for the companies and the banks as well as to go on the digital space. And yes, not to mention, but yes, data. So it is the biggest currency which we have in the nowadays. So use of data analytics, as we were hearing from earlier speakers as well, it's one of the most powerful tools which the bankers can be equipped with today. So be it any bank, be it a small bank, be it a large corporate bank, so data is something which every bank enjoys, and data is something which was not getting harnessed to the fullest in India as of now. But now there are ways and mediums where we can use this data to derive some better results for the banks, to derive some better products for our own customers, and to give customers a better experience with the ultimate banking. Now I will talk about that why we are deliberating more on the subject of risk analysis, going better, improvement in the NPA levels, and how exactly to achieve these things. So I'll quickly, deliberate upon what are the problems which are faced in the back end. So we all have been talking about functions and performance, where we say that banks need to update, but why exactly what is happening on the front end side? So where we are the customer side. Now, on the customer side, so there's a lot of problems which the customers face. At times, what happens is they are mostly not aware of how exactly a proposal or a case has to be submitted to a bank. Now, we customers, we are not well versed with, updated norms and regulations, what is happening in the banking industry. This is something which the banks, regulate internally. So how can we empower this tool? There's no MIS or tracking of the proposal in today's scenario. When we talk about that, I approached a bank. So still I have to manually, do the entire procedure, and I have to stay in touch with the banker. I need to visit the bank multiple times to get the status of what exactly is happening. Ultimately, what is happening is there's asymmetrical data which is going to the bank. Now, this is not exactly like we should say that the banks are not responding, but yes, ultimately the data which is getting internally in the bank, it's not symmetric in form. So today, if I'm a customer, I can take multiple data points and I can approach a bank. This is my balance sheet, this is my P&L, this is my tax return, this is my bank statement, I need money. Now it takes time for the bank to analyze that entire set of information and give you a decision whether they can actually process your file or not. So that is the ultimate reason of why there is an elongated response time from the banking industry when we talk about today, that the customers are not getting the particular responses on time. So what are the ramifications? Why are the banks not able to communicate on that much of a flow chain? That is because today the banks are getting non-filtered leads. So we as a country, we are close to more than 1 billion people, and we approach the banks in all sets of banking. So be it retail, be it SME, be it mid-corporate, large corporate, whatever division of the bank being. There's a lot of customers which are hitting the bank every day. But those customers are not screened. They are not filtered to the analysis which has to go internally in the bank. There's dissatisfaction with the data quality. The bankers keep on following up that I need this document to process your file, to process your loan further. Now, obviously, when we are doing everything manually, there are more man-hours involved. So when we tend to go towards automation, we have to think of a perspective of turnaround time. If today my lending cycle is of 60 days, that in 60 days or 45 days I can process a loan. So I have to think upon times, how can I process this loan in 15, 20 days? How can a customer be benefited with this entire shift of transformation of data? And ultimately, since there were non-filtered leads, there were more man-hours involved. So obviously, if we'll not use the data analytics as a whole, there will be lesser opportunities for the banks to operate also. And that will ultimately lead to lesser lending towards the smaller sector of the society. Now, there's another thing which the banks and the financial institutions have to understand today, that if there are not ways and means to screen a customer at the very front end of the bank, the opportunity loss for the bank cannot be monitored. We can say that our branch level has rejected a proposal which was not doable, but how can we say that our branch level has not rejected a proposal which was actually doable, and if which has become an opportunity for the other bank? So these sort of mediums are very, very important to understand from a banker, that how exactly have you taken your customer in the onboarding process with the bank? Have you done the due diligence? Have you done the entire set of data check on the client? So when we are sitting at the branch level, there are no kind of internal risk modules available to the banks. So it's just a formal file submission which happens, it goes to the next level, and that is where exactly the data risk analysis part starts. It is not at the first level of the bank. So now how can automation ease this? So we have basically devised an algorithm. Now this algorithm, which we call ScoreMe.in, is actually devising a credit worthiness score for a company in quick 10 minutes of time. This score is further compared to the entire industry set, and this is basically benchmarked to the entire industry. So we have included a score on multiple nature of businesses, so be it a manufacturer, be it a trader, be it a service provider, be it a company or a small company in any space, be it in the unorganized market. So I'm a Karyana store operator, I need money from the bank. How can bank access my credit worthiness? I don't have a balance sheet, I don't have a P&L statement, I don't maintain my accounts in that white. So it is important for a banker to understand how can you screen your unorganized side of the customers as well. So this is where we bring in our platform, where we screen the non-financial side of the customer, plus we also screen the financial side if available, and we devise a score for the banks. Now this score basically tells the bank what is the risk appetite in that customer, how far can the banks go and take exposure in this client. Now this is available on both the mediums, so be it an online platform, be it an offline platform. So it's a basic input sheet which you have to process, which basically leads towards the score generation for the company. As I mentioned, it is benchmarked to the entire industry set, what is available in the country. The entire data set has been bracketed into multiple segments based upon net sales, based upon geography. You will not be compared to a customer who is operating in north to a customer who is operating in west. So if I am working in the western side of the country, I will be only compared to what is happening in the west. How can I be assessed by the bank where I am performing? When it comes to the smaller section of the society, it doesn't matters how the macro level is performing. The steel industry as a whole might not be doing that good, but I am a small screwdriver manufacturer, so I can do well in my business. So these points are actually very, very important for the banks to understand. Now again, this is no human involvement is there in the system, so it is just the inputs which you have to make, and it's a simple drop down list. You have to select from the options for a customer, and further you have to process this. Once the customer processes this information, the banker knows that okay, fine, where exactly is the customer standing. Plus there's a automated tool for screening the bank statements. Now the balance sheets, the P&Ls, whatever the financial documents are on the one side, but what exactly is the company doing is reflected in the bank statements. So there has to be a tool to screen the bank statements. In today's lending process or the appraisal process, bank statement is one component which is still getting assessed manually. So we take the entire 100-page statement, we screen it manually, we look at what are the number of debits, my total credit submissions, and we compare it. So this software, it has a fully operational automated bank statement analyzer, where I just need to upload my bank statement, and what a banker will get is a full screened analysis of that particular company, be it on my in-house transactions. A banker can get to know how much of the money has floated internally in the company, what are the check returns, my debit transactions, my summary of the entire bank statement in a digital format. Plus, this empowers a banker to process that application in a faster go. If today we are talking about a 15 days of a appraisal cycle where I just know my customer, which we call it the KYC of the customers. So if that process can be done in quick 2 to 3 days time, so ultimately the lending scenario and the lending cycle can be reduced to a maximum of a 15 or a 20 days time. Because after doing such an analysis, where you have linked all the APIs, where you have done the bank statement analysis, you have scored the company, what actually is left to discuss on the amount side, on the interest side, and how exactly to take the proposal forward. Now exactly how you can lend more with this is because ultimately there's a shorter screening time which you have to do. For knowing the worthiness of a customer, you just need to spend 10 minutes, and further to do the analysis of the financial document, it takes another 10 minutes. The next 10 minutes we say is to assess whatever is happening in the live data usage. So you can verify the Aadhaar numbers, you can verify the GSTN numbers, you can verify what is the payment track record from the CIBIL, you can verify how exactly is the client performing in the public domain. So be it the information from MCA, be it from anywhere. So whatever the information is available about a customer, we bring it in front of the processing officer in quick 30 minutes of time. And that is where we say that we empower you to take a decision in 30 minutes. That after that, you can decide whether the client is in principle okay to be accepted in the bank or not. Now this is the live data websites which are crucially important to understand for any of the smaller companies as well. Now Aadhaar card is such a phenomenon which is available for everyone, and it has become a mandatory KYC document now. So how do we verify the Aadhaars? How do we verify the CIBIL? How do we verify the PAN? How do we verify if it's a business customer? What is the payment track record, if the company has transacted with any other institution in the past or not? So there are live data sets available which are incorporated in the software, and we give you a consolidated report for this. Now this also brings an opportunity which is, today I would say it's a parallel thing because the banks are still going towards the digital side. Once you are digital, it brings out an opportunity to make an online marketplace for your bank. So where a customer don't need to visit a branch to avail a loan. I straight away go to the bank's website, I have all the products listed there, I choose the application form, I do my quick check input sheet, the analysis is there in front of me, and I know the decision what is there, whether I'm eligible for this loan or not. So it's a simple process which you can create in even of the smallest of the agricultural proposal as well, wherein you can simply tell a customer that if you are fulfilling these eligibility criteria, you are most welcome into the bank. If you're not fulfilling, you'll give them a reason. Today, if there are 1,000 proposals coming into any bank on a monthly basis, we only process 20 to 30% of that. It is 70% of the proposals which are getting rejected. Is there any methodology to give that rejection? The answer is no. If today I am, presentable enough to the banker, if I have explained my case in a very presentable manner to my processing officer, I may get an entry into the bank. But was there any analysis being done on my admission to the bank? The answer is no. So there has to be some methodology which empowers you as well to give a specific reason to a customer that this is where we are rejecting you, you can improve this, you can come back to us in 6 months, 1 year's time, we are most happy to bank with you. So this is what actually enables you to have a comprehensive data set of a risk screening inside a bank. Now what makes us different is that we have tested this software with NSIC, which is the National Small Industries Corporation, and they have given us in writing that it's a 96% matching accuracy which we have to the current data set in India. Now that's the validation which has been done from the ministry side. So now we are trying to go live with banks and try to give them solutions where we can automate the entire risk screening part of the bank. So I think with the digital transformation coming in place, if banks can think of a policy where not just to automate the internal operations in the bank, but also to automate the operations of onboarding the customers, that can change the banking, how it used to happen in the past years and how it can happen in the future years. Thank you.